Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending September 20th, 2008. Wow, huh? What a week. What can I say? All the events that happened throughout this week, simply incredible. I don't think I've ever seen anything like it. Just the amount of volatility that went on within these 5 days was just unheard of. Now, obviously, these last couple of days on Thursday and Friday, we saw a major amount of short covering, okay, and that's why the market just rattled like crazy, like it did. But before you start loading the boat on your call options, let's take a look at the market from a more objective point of view. All right. So once again, we start off with the S&P 500 or SPY from a 3-year weekly view, and also this week was options expiration. So for those of you who made some money with options this month, congratulations. So as you can see, you still can't deny the fact that we still have a downtrend in progress, right? We have a series of lower lows and lower highs. Okay, we are still trading underneath the 20 and the 50-week moving average. However, we did break through 120. So from what I said last week, if we break through 120, look for support around 115. And look at where we ended up, around 114. Let me zoom in just a little bit for you guys. Now here's the thing. This is a very, I guess you can say it's rather bullish looking kind of candlestick. Why? Because look at the long lower shadow that we have here. The bears pushed it down, but the bulls managed to come back and rallied. And that's what happened on Thursday and Friday. We rallied higher and managed to close above 120, especially on high volume. So here's the thing. This can potentially be seen as a head fake. Okay, we had a head fake lower, right? It trapped all the bears, and then we closed above it. All right. Typically, this is a reversal sign, reversal, more or less a bullish reversal in this case, because of this head fake to the downside right here. Now, the true level to break to know if we're starting a new trend is right here at 132. Okay, if the market can break above and trade above the 132 level, then we can say that this was a successful retest. We have, I guess you can say, a double bottom here on a weekly view, and then we're starting to make lower lows, higher highs and higher lows, right? But right now we're not there yet. We're still here, barely closing above 120. So we got to wait to see if the market, if the bulls can push above the 132 level, because that will basically tell us that this is going to be a new trend that's going to start, and especially if it's able to trade above the 20 and the 50-week moving average. Next, we go into a daily view. As you can see, we broke through. We found support at 114. So 114 would be your new level of support right there. Okay, if the market ever comes down to test support, 114 is the level that you want to be looking for. Now, we did have a major gap up on Friday, but look at where prices are. It stopped right underneath the 50-day moving average. So we are still trading downwards. We still are making lower lows and lower highs. Once again, not until it can break above here can we say that there's a possible new trend in progress. Now, my best guess for the market is, see this gap right here? Okay, zoom in. This gap can act as support. And most likely, as you know, what they say in the market, gaps most of the time will get filled. And if that is the case, the market will more likely come down, test 120 again. And here's the thing, if 120 holds, then that's actually a pretty good bullish sign. Why? Because this now would become a higher low. If 120 comes down, closes the gap, holds, and shoots higher, that's actually a start of a higher high and higher low. Okay? So that's something that you want to see if you're bullish in the market. But if we break through 120 and come back to 114, then that's a different story, isn't it? Okay? So 120 will probably be a good level to look for if you're bullish on the market. And as long as that level holds, then that's good. And of course, you want to see a break above 132 for the bullish momentum to carry on. And lastly, we look at the hourly view. Hourly view, you can see the gap a little more clearly. You can see that 122 is going to be a very good support as well. Notice how we tested it once, twice, 3 times. Right here, it broke through, and prices came back up right here, tested as resistance. We closed on Thursday right underneath 122, and that's where basically the gap is. And also you can tell that's where the moving averages are. We're no longer trading underneath the 20 and the 50 hour moving average. Now we're above it. So on a short-term basis, the market is looking bullish, right? On the short-term hourly view. So, but both the weekly and the daily are saying that we still are in a downtrend. Okay, so short term we are bullish, longer term we are still bearish. Like I said, there's a very good chance that we will test the support right here, 122, and ultimately the good major support is still at 120. If these level holds, especially 120, then there's a very good chance that we can bounce higher. Right? Notice how on the low on Thursday, this was a very good reversal sign. Let me zoom in for you guys. Guess what that is? That's a hammer. Okay, see, notice how the downtrend's progressing. We had a shot to the bottom, came back up and closed as a hammer right at the support of 116. So this was a very good, if you managed to spot this right here, that was a very good entry. All right, and if you managed to hold to Friday, well, that's a very good trade. You basically made like a 10-point move right there in just a matter of one day. And also, zooming out, you notice that MACD was getting divergent and it's getting weak. So you notice that this move to the downside was also getting weak. So you were expecting some kind of reversal coming soon. But nonetheless, going back to the support, 124 is where the market more or less closed at. So 124, your gap at 122, and then ultimate support at 120. Okay, these are levels to look for. Upside levels is definitely your 128 as far as immediate resistance. And then ultimately your 132, as we saw in the daily view and weekly view, is the ultimate level of resistance to break above. Okay, next we go into the VIX. Once again, the VIX, incredible. I mean, this is probably the first time I've ever seen the VIX trade above 40. Not since 9/11 have we seen the VIX up in the 40s and even in the 50s. So this is actually pretty significant. Zooming out just a little bit, notice how 30 was pretty much the level of extreme bearishness for this year at least. We had 1, 2, 3 times this year where the market pierced above 30. Now, what's different about this time is that notice how when we pierced above 30, we only managed to close above it maybe once or 1 or 2 days, 2 days max, right? But notice what's going on right now. We have 1, 2, 3, 4, 5 days where the market closed above 30 on the VIX. That's pretty significant, right? That means there's still a lot of fear going on in the market. Okay, there's still emotions running high, and people are buying. They're still buying a lot of puts out there in the market. So, right, so using the VIX is all relative. I mean, just because it's up in the 30s doesn't necessarily mean that it'll turn around instantly, right? Now that we're able to pierce up in the 40s, this will be the new relative high. So when the market gets up here in the 30s, it's no longer considered high anymore. It has to come up here in the 40s to be considered a high or new relative high, extreme bearishness, right? That would be the new level. Before it was 30, right? Before it was 30, but now it's no longer 30. It's going to be in the 40s. So if the VIX does come down, I expect to find some kind of support right here around 30, and also where the 20-day moving average is going to meet. So they're more likely going to converge right around this 30 level. Okay. We were a little bit, I mean, I wouldn't call this exactly overbought, but I mean, just a little bit. But nonetheless, I mean, we still have an uptrend in the VIX, which still translates to a downtrend in the market. Okay, going back to the SPY, just to recap, like I said, if the market comes back down a little bit and retests 120 and that holds, that's more or less a very good bullish sign. And it's even more bullish if we're able to break above 132. So those are the levels to be looking for. If you're bullish. If you're bearish, then obviously expect 128, at least the 50-day moving average, to hold, and we can expect to break a 120 if you're bearish on that. All in all, I would say just be careful out there. I mean, seriously, just if you're uncertain about the market, then just stay in cash. You know, just stay in cash. I mean, you don't have to trade. I've mentioned that before in my other video. You don't always have to trade, and in times like this when the market is so uncertain and so volatile, it's best to just kind of stay out of it and let the dust settle for a bit.